Good morning, good afternoon, and of course, good evening, traders from across the globe. Thank you for tuning in to my 2,433rd edition of Short-Term Trading Live with Oscar Carboni. So, here we are, Tuesday night. We just got past the holiday, 4th of July holiday. We've got, of course, markets did all kinds of crazy reversals and stuff went on. But the big thing that happened was we rallied up in the E-mini S&P, NASDAQ. Well, there was no gap in NASDAQ, but we rallied up and filled the E-mini S&P. The little baby gap in NASDAQ disappeared like that. But we went up, filled the gap in S&P, and dropped afterwards, right? Then I came back from vacation. We had a little trade on Thursday last week in the euro. Thank you, OMNI. We made a few bucks. 4th of July shows up. We do nothing. And then here we are. We didn't trade Tuesday. 4th of July was Monday. Markets closed. Tuesday, we accepted no trades. Tuesday night for Wednesday, we are going to make some money together. At least that's the plan, putting in the stops first. Remember, there's risk involved in this game. Never trade without stops. Always put them in first. They are your protection when something goes wrong or news comes out in these markets. So never trade without stops. Traders, what is on the board? Well, video 2433 is for trading on July 6th, 2022. And what I've got to tell you is off the bat, number one, crude oil, lumber, copper, grains, precious metals, etc. They have all deflated since the Fed has started raising interest rates. Not every single grain, right? But just about all of them have deflated, and the metals have deflated, especially platinum and palladium, which is used in industry, and copper. My goodness, it has really broken. That is called deflation, kids. That is what the Fed has been trying to do by by raising rates and lowering the market a little bit. So, we mentioned many times that we are not 2008, 2009, right? This is not the situation. This situation, we've got a runaway train on a track, running at full speed. In fact, it's going so fast that the wheels are turning red. They're glowing from fire, from moving so fast. And the Fed said, whoa, we got to slow this down, and started putting the brakes on. And that's all we have seen. And it's been orderly. Stock market came down a little bit, as did these. And these are very important to our economy. So we're getting deflation where we wanted to see it, which is, of course, in our market and in the metals and the commodities that we use, especially in industry. Now we've got bonds that have rallied. You know, when bonds go up, it lowers rates. So what do we have here? We have deflated commodities. The Fed needed that. We've got rates that, of course, were raised, but now they've gone back up a little and they're lowering themselves. So you've got something good for the market here. You've got something good for the stock market here. And here's what I am telling you. Number one and number two will equate to a stock market repricing to the upside. We are going up now to make up for the crude, which just dropped, I don't know, $25, $27. Crude just dropped. That's huge. Interest rates going back down a little. That's huge. Commodities deflating. That is huge. I am telling you, not that it might, it will equate to a little bit of a repricing to the upside of the E-mini S&P. However, do not fall in love with the upside. Remains valid. We do expect some upside. That doesn't mean run out tomorrow morning and expect the market to go straight up. But these things that just happened, and we are short-term traders, should give us some short-term buoy in the stock market. That's what we're expecting by what we've seen. Now, of course, I've got charts that will illustrate everything on this board and prove that to you, and you'll see why the market very likely will reprice up this week or into next week instead of heading down. Now, is there more downside coming? Sure, there could be. We're talking short-term now. The things that just happened should make the stock market move higher. The other thing I will tell you is if crude oil, which dropped from 124-ish all the way down to $98, $97, if you could get crude down another $20 into the 70s, I would call bottom in the stock market. I kid you not, the Fed raising rates could never stop this animal. It's too strong. The price of crude and Fed raising rates has knocked us down. You take either of those two out of the equation, this goes right back up. So if you can get crude to get down in the 70s, we will explode. However, it's long-term trading. Short-term trading, Tuesday night into Wednesday, Wednesday night into Thursday. this is what we're looking for, and we do expect that the market should find some legs because of what the other markets have done. Traders, I've got great charts I want to show you. Remember, I've got an OMNI camp coming up in September. I want you to fill out an application, see if you qualify for a seat, and you come out to Las Vegas for a 5-day seminar where I will teach you the art of Oscar's market navigational indicator, the OMNI. If you'd like to learn the OMNI for yourselves, make sure you come to livewithoscar.com, fill out an OMNI camp application. If you'd like to really tell me about yourselves and fill out an apprehensive application, a comprehensive application. If you'd like to do that, make sure you go to omnibootcamp.com, fill out the application there, and I'll know more about you when I call you back on the telephone. Barring that, I've got nothing else to say but this. Let's go make some money tomorrow, and let's go look at some charts. Traders, the Fed raised rates. You know, copper is used in everything, right? It's in all the cars, it's in building, it's in everything. It's in industry everywhere. They raised rates, and look what's happened to copper since they raised rates. I mean, that is deflationary. This is why, by the way, they raised rates to knock markets like this down. Copper, down. Look at this. The Fed raises rates. Look at the price of lumber. Everything about building, about housing. If lumber's expensive, so is the housing, right? Look at what's happened here. This is very deflationary. We love seeing this. Here's what's next. Corn. Can anybody say ethanol? Look at the price of corn since they've raised rates. Down, down, down we go. Look at something like this. Wheat. Now, wheat is in the middle of a war zone. Why is it going down? Because the laws of supply and demand will work in any market anywhere. And what do I mean by that? Well, when you've got a wheat market that goes from where it was in the 4s or 5s all the way up to the 10 area, 980, 10, what you have is every grower in the world is going to come out and grow wheat. Why? Because that's called demand. There is plenty of demand, not enough supply. I'm growing wheat. Well, look what happened. It put in a big head and shoulders. Down we go, because all farmers went out and grew wheat. So the laws of supply and demand will work in almost any situation, because in this world, industry is find a need and fill it. I'm a farmer, I've got land, we need wheat. Guess what I'm growing? That's the whole idea behind it. So what else do we have? We also have T-bonds. Now watch this. You've had those commodities come down, right, that I was showing you about. This is 30-year T-bonds. You've seen this chart for the last several years in many videos. This is a weekly, and it shows that we had the big rally in bonds for such a long time, and then we finally had that capitulation blow off, and we started to break down, and right around here they started to finally move rates, and bonds dropped. When bonds drop, rates go higher, right? When bonds drop, rates go higher. When bonds go higher, rates go lower. So right here you had the instance of bonds going higher while rates went lower. Now you've got the instance where bonds are going lower, makes rates go higher. Okay, that's the weekly. I'm going to show you the daily because we've had a bit of a rally here. This is some help for us. So look at the rally that we've had. Now that we've gone from a weekly to a daily, this is the same exact move, but if you'll look, we went from 132.09 all the way up to 141.17. We're talking almost 10 handles back up in bonds, sending interest rates back down. That's what happens when bonds go up. So what do we have now? Commodities, crude oil, lumber, copper, grains, precious metals heading down. You've got 30-year bonds heading up, which means interest rates are trickling back down just a little. And you've got crude that has dropped from 123.68 all the way to 97.65 this month. Well, in the last month. That is huge. That is another thing that should help the stock market. So all of that, if you ask me, coupled with the dollar being really strong. Now, if you have inflation and your currency is dropping, you've got a serious problem. If you've got inflation like we have and your currency is rallying, you do not feel the inflation as much as every other country. Only at the pump with gas have we felt inflation. Everything else, yes, there's been inflation. Yes, we've seen prices go up, but so has our currency. So if you've got our currency going up, you've got things like crude oil, lumber, copper, grains, precious metals going up, and bonds lowering their interest rates by going up themselves, that has to equate to something like this. This is what I expect. Now that we've filled the gap, right? A mini S&P chart, we went up and filled that gap. filled. Market reacted, came back down. Now you've got a little more reaction starting to head back up. Why? Because of everything I just showed you. And I've got a bullish Omni for trading for tomorrow. So we expect upside, and then here's why we're not going to fall in love with the upside, especially just yet. Same chart, even in the S&P, but I've drawn a resistance line on it for you now. We could get up somewhere near 4,000 in the S&P, and all that will do is bring us up to the resistance, which has stalled us many times before. So we're not going to fall in love with the upside, but we sure are going to give it a little peck on the cheek, a little kiss, and ride this thing up a little bit for the next couple of days. That's what I'm expecting, traders. Of course, I will put my stops in first to make sure that if I'm wrong, I get knocked out. And what I'll tell you to do is always say this to yourselves while you're trading, because it'll help you keep your emotions in check. And by now, you should know what that is. Stops are in. Emotions are out. Rock and roll, traders. Thank you for tuning in. I will see you all at livewithoscar.com.